Hello, everyone. Welcome to another episode of The Circuit. I am Ben Beharan.
Greetings, programs. I'm Jay Goldberg.
Well, this was another, what would you say, big week for lots of earnings, lots of very, very telling earnings across the board from, let's just say, cloud to client. In the grand scheme of, right, the macro view, there was a lot of very interesting commentary. So I want to start by addressing the bubble bears, because now I'm caveating everything I'm just saying with everyone with whatever Twitter shows me on my, what do we say, for you tab is what gets shown. And for some reason I saw a bunch of people talking about we're in a bubble, this isn't sustainable, and a lot of that coming from, right, the increased, right, sort of capex. But I found this interesting chart that I'm just going to sort of share the stat off of, and then we can kind of talk about bubble dynamics, non-bubble dynamics, etc., what it means. But basically, this was a start that Paul Kudrowski did on his website, paulkudrowski.com. Infrastructure capex as a percentage of U.S. GDP by era. So during the railroad era in 1880s, it was 6%. If you want to say, telecom-ish, right, infrastructure-ish for like what we're saying, .com-ish, it was 1%. And as of 2025, with current CapEx extras, it's 1.2%. So slightly higher, not as high as the 6%, arguably going higher. But I use that to say it's the correct analogy to a theme we've hit on multiple times, that this is picks and shovels. This is like building railroads, building roads, digging of canals, et cetera, et cetera, et cetera. And so the question, right, is how long, how big? But this is the fundamental, backbone of this new, call it quasi digital industrial era, in which people will monetize that infrastructure.
I I look at it slightly differently. I think that I think that we are in some form of a bubble. I don't think bubbles are necessarily bad things.
Agree.
I think what gives me a little bit of composure in this is that this bubble is not as crazy as some of those other bubbles, right? It wasn't, the dot-com days were crazy. Everybody was doing like wild things, and they were monetizing, were measuring, valuing weird metrics. The housing bubble was crazy, where you had people, you know, waiters and waitresses with five houses. That was like very widespread craziness. This is not that widespread. Certainly the multiples, like the chart I get a lot is the Cisco chart versus the Nvidia chart, Cisco 2000 chart versus Nvidia
Right.
today chart, and oh, look, they both go up, they look the same, and yeah, but the multiple applied to Nvidia versus at now versus the multiple that Cisco got. I mean, Cisco was like 200, 300 times. Nvidia is at a different multiple. Like it's not as excessive a bubble as that as we've had in the past. Um,
Well, and I'd also say, like any bubble, like if you just, people see bubble as a circle, right? I'm assuming everybody would see a bubble, right, as a circle. Well, half of that circle would be an S curve if you took the bottom half out. So the question is not, like, again, yes, it's an inflationary aspect of economics. The question is, like, how big is it, right? And if you just take that circle and you look at half as an S curve, well, what if it's a really big one and it goes for 15 years? You can still say it's a bubble, right? Ish, by definition. But it's just that, what is it? What does the peak, like, when does the S curve peak, and how long does that plateau go, and then how fast does it come down? And different cycles, do different things, right? The .com bubble was small, it went up big, it popped quick. We haven't quite seen something like that. This feels big, right?
well, I mean, I think that the when I say this is a bubble, as opposed to something that's just a very strong investment cycle, there's a bit of a disconnect here in that there are a lot of no, there's not a lot. There's a small number of companies spending a lot of money for a investment purpose that's not entirely clear even to them, right? And there's it's speculative is a dangerous word. Like I don't like to use that, but like there is an element of belief in here as opposed to rigorous analytics going into their investments. They all know they need to do it, but there is a degree of emotion here and a degree of belief that they're investing towards. And I say this because I think at some point it'll get ahead of itself, and then the question is that point where it's ahead of itself, is that, you know, at some point things sort of align and catch up, and doesn't I don't think that's going to happen soon, but
Yes.
it will happen. It's not going to take 15 years, right? We'll have there will absolutely be a moment where everyone's like, oh my god, I can't believe we spent so much money on all that stuff, and then like a year later it'll be like, oh my god, I can't believe how do we live without this, like, right? That's what the internet bubble gave us, is a couple years of, oh, this that was dumb, and then all of a sudden, like, internet is everywhere and all the things. And I think we're going to go through something similar to that with AI, because I really really don't believe any of the companies who are spending the really big dollars really know what they're spending it for. I'm just not convinced. The business case just isn't there yet. Right?
Or they're spending it on GPUs. I
Well, I
mean,
mean, yeah,
that's like,
exactly.
yeah.
Exactly. We know this.
Which, so let's just transition from that. So I think again, like the discussion broadly is yes, this is a big cycle. We have to monetize this. I think that right becomes key, which is where the monetization of that infrastructure that everybody looks at, like what's revenue contribution of AI relative to Capex, which is the analysis that happens with Microsoft, Google, and even Meta, which we'll bring up, which I think is, again, we've gone back and forth on, super interesting since they're not a CSP. But there comes back to, like, you look at the issues, and in this case I'm going to pick on Amazon, but you look at the struggles that a company who feels, or the narrative is, right, is behind in AI, in that they did not spend the same amount of GPU allocation, right? They spent a lot on CPUs, custom CPUs. They weren't as prepared for the AI accelerator era as was Microsoft was, and really Google, right? Who were the two beneficiaries from that. And it just shows, like, they got to spend that money, to make that money if you want to rent it out to people who will book at scale, right? And you're seeing that capacity trickle over to CoreWeave and others who are, again, benefiting from, we just don't have enough GPUs, right? Computing is the bottleneck. But there's the spend to make, and then there's the let's make those investments on. And that's the conversation that is hitting really everybody now, because you're seeing dollars from Meta, you're seeing dollars from Google, you're seeing dollars from Azure, and you're seeing a little bit of that for Amazon, but not as much, right? They're not growing at the same rate as Azure and GCP.
Yeah, and I think that's one of the things that actually unnerves me a little bit about this dynamic is, and let me take a step back and say we're recording this on Friday, August 1st. We just went through Microsoft, Amazon, and Meta's earnings this week, and the thing that really gets me a little, raises hairs on the back of my neck, is companies that spent a lot more on capex than they had forecast did better than the companies who spent less.
Right, right, right.
And I guarantee you there will be a point in a year, two, I don't know when, where people will be like, "Oh, I can't believe, what were they thinking?" It's just it's a little weird to like. I understand if you're working in technology and you like, oh, spend more, that's good. But for investors to get excited about the capex numbers that we saw this week,
Right.
is a little bubbly.
Well, and I think honestly, like, I had some calls, I'm sure you had some calls. Like, I think what people would like to know is more clarity on the AI software specific revenue contributions to the growth in the business. I mean, I think Microsoft has sort of hinted at this. There's Google as well, but honestly, Google's in an interesting spot because their dynamics are different in that they're not paying somebody for a foundational model like Microsoft is to OpenAI or Amazon is to Anthropic. They have that, so their dollars look bigger than the other two, honestly. But I think people want to see that, right? Relative to your spend, do I believe you can monetize? Because I think the general consensus, and you heard all three companies sort of say this on their earnings, which is, we have more demand than we have supply for compute infrastructure for AI. So clearly, a lot of people want to run these workloads. They're going to pay for that. Right? You're going to pay for this to run a cloud. But how much more of that, right? In terms of the AI dollars they're going to get plus the capex, right? And in sort of the depreciation stuff we've talked about before, right? How long does it take to monetize that? I think that's what they want to see, that balances out and that it's not what you said, which is like, are we just spending this and hoping people will come and rent our money? Is there a pragmatic approach to this that the spend can correlate to dollars in our depreciation so that this becomes right profitable? I'm monetizing this infrastructure at a good margin.
Right. Right. Yeah. And I think, I mean, I read a few notes on this, and I can't quite tell the degree to which Google in particular is like really seeing good returns from its AI, and how much of that is people just reading into things, what they want to see. I just don't know. I think it's a little of both, right? I think they're doing okay. I think they're winning some business. I don't. I know there's some people who say that Google Cloud GCP is really winning this, and I'm not convinced that's true yet. It could be, but I don't think we quite have proof points on that.
I mean, I think the one. So, all right. So let's just balance these two, Google and Meta, before we go to Microsoft and Amazon, because there's a little bit of similarities in Google and Meta and how they're going to monetize for first party stuff via ads, and there's a little bit of similarity with obviously GCP to Azure and AWS. But Meta was fascinating because people like just didn't see this coming. Like the amount of money that they were making and monetizing in terms of ads in the ecosystem, like this, I mean, the stock was up the most of everybody that we tracked this week, right after. And I think it was just shocking that they were really monetizing. But even Zuckerberg like made this point, like we're not a CSP, right? We don't rent. We don't have to invest to rent. This is purely for our monetization, and you see it in our numbers. And so people were like, oh wow, like they're really going to do this. However, it was interesting that still the narrative to Google, because Google, you should think outside of this GCP, should have a similar dynamic, right? They invest in infrastructure and they're going to monetize the ads. But that same sentiment didn't carry over to Google the same way it carried over to Meta in their belief that they can monetize first party AI efforts through ads, which I thought was really truly fascinating, right?
Yeah, I think that's fair because there is this weird dynamic where people get very confused by when you're talking about Google AI spend. People aren't always clear, at least in the conversations I've seen or heard, between GCP and core Google, and it gets very mixed up, right? Because like I said, I don't think GCP is. I don't think it's clear yet if GCP is really benefiting from AI spend by its customers, but I think there is a good case like Google. I mean, Google has faces a pretty serious threat from AI, and they seem to be responding well. I don't follow Google, so I don't really know, but like they seem to be, at least this quarter, they seem to have said the right things about the ads that they're seeing, the ad growth that they're seeing because of AI. So, but I bring this up because we have been talking about this for
Yes.
a
Yes.
long time, right? Which
Yes.
is Google and core Meta have really compelling need for AI spend, and the cloud service providers' need for that is only as good as their customers. The extent that the large enterprises want AI, and that's a disconnect.
Right.
And so,
So I want to ask this though, then, right? And you can apply everybody to this question, including Amazon and Microsoft. But does it seem like Zuckerberg and team at Meta then more investors are going to be willing to buy into their capex spend? Because it sounds like they're building the largest cluster at this point of anybody. In fact, semi analysis said today they're doing it in tenths, which I'd like to see these tenths to be honest with you. How weather safe are they? I mean, like, you have to know. Like, I know that it's not like they're just putting them up in like tents that some hurricane can take, but you know what I mean? Like, they are building. So do you think that they have the most believable story in monetization of CapEx because than the other three, or no?
Oh yeah, I think it's clear. I think they've been showing it already. In
Okay.
their ad matching has improved because of AI. They've said that for a year
Yeah.
now.
Couple quarters. Yeah.
And then you go further down the path and some of the things that they're working on, it looks pretty interesting. Like I firmly believe, and I think mostly Ben Thompson at Stratechery is ahead on this. But I've heard this from a few places. Is ultimately they're going to get to the point where they're not Meta is not going to just sell an ad for, like, already Meta sort of does the targeting for you, right? If you're an advertiser on Meta or on Facebook, they just sort of pick where the ads are going to show up, right? You give them an ad and you give them a budget and they optimize it, but you don't even like have to pick the demographics. It's pretty automated. The next step in that is Facebook will create the content. You don't even need to give them an ad,
Yeah. I mean,
right?
that's happening. I do
That's
think we're
happening.
seeing that, to be honest with you.
Yeah, and I think we're in still in early stages of that. And I think the what was really interesting about the Facebook results is the earnings, they came out, the earnings, like, the numbers were good. Their capex was much bigger than people expected. And on top of all that, we've just had a month of them being all over the news for the crazy salaries they're offering to
Yeah.
people. Like, there was like
Right.
somebody yesterday, they figured out who somebody got $1 billion offer to go work at Meta and turned it down, right? So I like, and so in that context, investors are like, all right, spend more.
And that's kind of what I'm getting at, right? I don't think they're facing the same criticism for the spend at this moment because they're doing such a clean and clear job monetizing it.
Yeah.
And I just, again, I go back to how fascinating that is for Google. That when I had some conversations with folks about this, they were like, well, we believe that historically Meta has done a better job monetizing this stuff than Google has, which I think is a fair point. But I also think we've mentioned this before, like, how easy and clean is it to throw ads or recommendations into your Ask AI prompt when you kind of want it to feel more genuine and organic, not forced or biased. Um, and Google's going to have to solve that because clearly
Yeah.
the vast majority of people are not going to spend $20 or $10 a month for these advanced features in search. They're going to have to add ads. So, but similar dynamic, right? Like you pointed out, they do have the image generation, the video generation stuff is pretty good. So people can make these videos, make these ads. My point is, it's interesting to me that they're not getting the same kind of credit for first party monetization of AI like Meta is, when theoretically they're in a similar spot.
Yeah, I think there's still a lot of concerns about the vulnerability of search. And we've talked about this a little bit. And again, I'm not a Google analyst, but like, there is some credit. I think anecdotally, everybody I talk to who's paying attention to this is like, oh, I never use Google anymore. I just go to OpenAI. And I don't think that's quite right, but that fear exists, and it gives people pause. Like, can we just get rid of search? And I really don't believe that's going to happen if Google stays on top of it.
I tend to agree. I think that's, yes, true at a global scale. What I will say, though, relative to a name that we didn't really intend to talk about today, so maybe this is the only point I'll make, is um, if the DOJ ruling disrupts Apple's search deal with
Yeah.
Google, does Apple then say, well, let's just make a deal with OpenAI at this point instead of Google, or buy, as much as I hate the idea that they buy Perplexity and Mistral, right, or something like that, and then have your own search engine, have your own agent, cut Google out entirely. Apple's a couple billion installed base, right, of highly profitable customers that can monetize these things. I just wonder if that shakes it up at all and gives Apple a different path than just Google search. Do you know what I mean? And at which point they could tip the scales, obviously, right, just for iOS, but they could tip the scales because they have a huge global user base.
Yeah, I think that's true. I mean, I think I said it a minute ago. Is like there is a serious threat facing Google, and I think this quarter they demonstrated to the street that they're at least fighting it, right? And I think it's theirs to lose. I don't think OpenAI has a natural win here. I think there's a lot of problems with the business model there for
Yes,
AI search. There's no clear business model yet,
for sure.
and I don't see why OpenAI can solve that better than Google can.
Well, I
I
think
mean, my
well,
point is
okay.
it's Google's to lose here. They are absolutely very much at
Yes,
risk.
I'd agree with you. I agree with you. But I think that where my brain goes on this is like, and again, this doubles back to, how does Apple solve their problem with AI, which we've talked about is, do they insource or do you outsource? But let's say they just outsource and they right pay or work with OpenAI with some form of a exclusive version, right, for them that is co-developed, optimized, and fine-tuned for Apple, but still cutting edge, and then take more ownership of the monetization. Because as I think Apple, I mean, nobody's going to believe this, man, but I do think Apple's actually in a really good spot to charge for something like this, like within their if it's really, really useful and valuable. I mean, look, they just on their earnings call, they said, we have a record number of iCloud storage billings. Like they're increasing people just paying for storage because they're like, I'm out of space on my iPhone. So here's $5, here's $10. So I think they're in a good spot. They could monetize this versus take the payment is my point. It's a change, right? But I think they could do that with OpenAI.
I think I think there are reasons why Apple wouldn't want to do that. I think it's very dangerous for them to put their fate entirely in OpenAI's hands.
I agree, but I don't, barring them buying something like Mistral, I don't see how they insource this because Perplexity doesn't solve their problem. They can't buy Anthropic, and they don't have that model that Google and OpenAI have. Even Meta's is terrible, to be honest with you. Like, this is the part that blows my mind is Zuckerberg out there talking about, super intelligence, and we're gonna have all this stuff great in your glasses. And then I try Meta Live AI in my glasses and I give it access to camera. And I say, like, what am I looking at? Tell me about it. It's so bad. Like, so bad. When I was in New York, I tried this because I did this between Google Gemini with video and Meta. I'm looking at some video or some building when we're on the ferry, and I want to know what it is. So I Ask AI with Meta, and I say, "Hey, tell me about this building." And it goes, "You're looking at a brick building with some glass spackling and whatnot." I'm like, "Okay." I show it to Gemini Live with video, and it tells me the history of the building, when it was developed, what the business was prior, all the information about the current, building, historical moments, and I'm like, it's like way better than Meta's.
Yeah,
Meta's was terrible.
yeah. Well, no, I don't know. I'm still again. I'm not convinced any of these companies know what the business model is for any of their AI stuff,
No,
except for
you're
Meta.
right. Except for Meta. All right, so I think that's a good point. All right, so let's move to Microsoft and Amazon because I am curious what you saw track. So back to my sort of point, and I tweeted this like correlation or causation, but you know, Microsoft has the most GPUs of anybody, like installed base wise,
Hmm.
by a pretty good margin. Because again, Amazon underinvested there. They invested in CPUs because again, and rightfully so, their landscape of the world was general cloud software, right? Boring SaaS, like we talked to last week. And sauce, I mean SaaS, not sauce
That's
like
yeah,
the
yeah.
the French sauce I make in a saute pan. But so their outlook was we need more CPU compute. That's what they saw, right? Demand for. So I get it. But Microsoft clearly with OpenAI was like, we need a bunch of GPUs. So my point was the fact that they're growing at this 30+% a quarter run rate of growth for Azure, as is Google, as is GCP. I think Microsoft was 39. Google was just shy of that compared to Amazon 17, which is what really took the hook for them. Actually, is correlated to their investment in GPUs is sort of like my point. Like they invested in that. Yes, OpenAI plays a role, but they're benefiting from that investment in absorbing cloud AI workflows as they are, right, compared to Amazon. But I saw a bunch of different sort of commentary on this capex spend because Amazon's looked a little bit curious in terms of like they're not spending at the same rate, yet they still have a backflow, as Jassy said, that they're still seeing more supply than they or more demand than they have supply for in terms of AI. So I'm curious about this because it's kind of like, yes, I agree with the perception that they're behind. They also still have a ton of cloud workflows, right? They're the majority shareholder of just public cloud CSP workloads. But there's this fascinating dynamic that these two other cloud competitors are growing much faster. And if this rate doesn't change, a couple of analysis I've seen, if this rate doesn't change and the growth rate for Azure stays sub 20, which is roughly the prediction for the next couple of quarters, that they could surprise to the upside, and Microsoft still holds in the 30s, Microsoft will be the second largest or the first largest cloud provider within 3 years, 3 to 4 years.
Yeah, that's because I mean everyone's moving to GPU compute, right? And I think that's and I'll throw another wild card in here. It's not just that Azure is on a better trajectory than AWS. You also have Oracle on an incredible trajectory, investing very heavily
In GPU,
or
yeah.
right in GPU. Oracle compute, Oracle Cloud was like forgotten 18 months ago, a year ago. Nobody thought about Oracle Cloud, and now they're not going to overtake the big three anytime soon, but they're growing much faster, right? And so we could see a big shakeup. That being
Yeah.
said, the first email I saw this morning was an announcement between Amazon and Nvidia for it was not a big deal announcement, but it was like Nvidia's trying to
So,
balance out its allocations.
but this is where, back to the semis point, I really think this is interesting for Amazon. Is okay. What do you do at this point? Do you and again, it's not like there's just GPUs sitting on shelves that you can go get, right? So essentially, Jensen sits there and's like, how many do you need? Well, I can't make that many, so I got to sell X amount to somebody and X amount to somebody and X amount to this person, right?
Mm-hmm.
So it's not like they're just all of a sudden going to solve their GPU problem. But I don't think Trainium 2 and or Trainium 3, which is coming, actually solves this really either. So like, where do they put their investment in CapEx, right? When you're sort of like, I need it, but where am I going to get it? The easiest way for me to get it is to invest in my own, but I don't know if that solves their problem because that's not what third-party software's companies want right now. They want GPUs.
So yeah, it's a tricky one. One, I'll point out that even though Microsoft, to your point, has the largest number of GPUs, if you actually look at raw compute power, what is that, quintaflops or petaflops or whatever the
Quadrillions? Oh no,
I
penta,
like
quadra.
if you add up the total compute of Google for AI, they actually have twice as much as Microsoft, 50% more than Microsoft. They're bigger than Microsoft in total AI compute because they have TPUs which are super efficient for this, right?
Hmm.
And so if I'm Amazon, maybe that sways me towards Trainium, but I think what really happens is that, and that's why this email this morning sort of caught my eye, is I think what really is going to happen here is Amazon to some degree knows what their customers want, and they're just going to buy as much Nvidia. They're gonna go to Jensen and cut them a deal to get to get
Okay,
to up their allocation.
so I was leading with all of that to then say, like, could AMD benefit from this? Like, do you think filling that gap in we need GPUs, maybe it's not Trainium, and I make this point across everybody, right? Because it's just, I mean, just looking at the supply chain, for CoWoS and wafers for even TSMC next year, you're like, it's not like we're all of a sudden going to pull new wafers off the wafer tree that's growing, and people are stuck. Like, we know how many you're going to make. That said, AMD will have stuff to sell to fill that gap, and so I do wonder, you know, is this the bright spot? Like, this real pinch point, the bright spot for a little bit more. Not this year, obviously. We know AMD is not upping their AI, forecast for this year, but next year looks relatively promising, especially on the back of their rack solution. So I just wonder if maybe Amazon goes, well, let's go deeper, right, with AMD because we can, and let's maybe work with them more of the stack, work with them with Anthropic, which I think would make a ton of sense. And then that I think things get really interesting for AMD at that point.
I mean, it's I I mean these capex numbers are so big. Everybody's going to benefit. Does I mean what would break it open for AMD? Yeah, a big hyperscaler win. It was noticeable in their AI day 2 months ago that they had a lot of high profile people come
Yeah,
on
including
stage,
OpenAI. Right.
including
Right.
OpenAI and X, and but the one noticeable one was that was missing sort of was Amazon, and they were in the press release, but they didn't send anybody, and they're very quiet about it. And in the Q&A, somebody asked Lisa about that, and she said, we can't talk about our partners that way. They have to make the decision, and she kind of hinted that there'd be something about it at the AWS event, but I don't think there was. So I don't know. Maybe there's a big deal in the works, or maybe they're just Amazon's still trying to figure out what to do.
Yeah. No,
Right.
yeah, I agree. And I think again, right, it comes down to be honest with you, I don't, and I say this just from coming off being at AWS Summit a couple weeks ago, and I had conversations about this. I was like, look, guys, the perception is you're behind, and they were like, nah, that's not true. And so I was like, I
Okay.
think, but I think now management gets it. I think now they see, okay, we need to work this out, and I just wonder like what does that then accelerate over the next couple of years in their investments here. And I to your point, right, about the capex increase, right, it's going to benefit somebody. And again, I just feel like yes, you're right, they could give Jensen more money, but that's going to take away from somebody else. Maybe that's Google because they're happy with TPUs. I don't know. It's just that, like I said, it's not like there's GPUs going around for everybody. An allocation is going to have to be strategically brought to whoever, and that's going to come at the expense of someone else at this point.
Yeah, I think that's been clear. I think for a while, allocation. Nvidia is in control now because they control allocation of their own parts, and I I I I, I believe I almost know that Jensen is very aware of that power, and he's playing them off against each other because he's the kingmaker, and he knows it. And so if you're let's game theory this out a little bit. If you're Jensen, who do you really want to see succeed? It's Amazon until 2 years ago was the king of the cloud and was throwing their weight around, and so maybe Nvidia doesn't want to, wants to weaken their biggest, adversary or however you want to term that. But like, if it feels like we're playing some medieval
I know,
kingdom
I
board
know,
game, right?
I
And
know, but
and in that context, Jensen's going to keep the allocation to AWS short. But then who does he benefit? Who's he going to favor? Oracle probably, but also the neoclouds, right?
100% NeoCloud and 100% Oracle. I agree. I think Amazon was interesting to me, and Microsoft similarly, because they're trying to articulate the middleware that they bring to the table, right? The security stuff they bring, the software, right? Which I don't think Oracle really or CoreWeave offers. It's just bare metal, and that's fine. There's a role for that. But I think that's the interesting bit is how compute allocation gets moved around. And I've been trying to do this. Like investors threw me this question, and I don't think there's any way to do this. But maybe if you know it, or if our listeners are clever, like just can we come up with a true capacity compute capabilities by hyperscaler? Like who has the most compute, right, in flops based on infrastructure? Like it's tricky because you'd really need to know every SKU of GPU accelerator, right, from version to version to version, and what. But that's the point, right? Is that who's going to benefit is that who can come up with the most compute to bring to the software world, and that's where they'll pay these premiums, right, to catch up. But it's fixed, right? It's finite. It's not like everybody, in the next couple of years, to our point about the bubble, all of a sudden catches up with demand. Like it's a foreseeable runway.
Yeah, yeah. I Those models exist. Those models exist, right? People have a feel for it. Like semi analysis has that, but then I know people on the buy side who have recreated it, um, combing through supply chain data, talking to every company in Taiwan and South Korea. There's a rough model out there of how much who has how much compute, right? Google is ahead. Microsoft has the most number of GPUs. OpenAI is surging forward, um, and all of that puts Jensen in the
Yeah.
kingmaker position.
Yep, you're totally right. I mean, I still think, right, your safest bets just from a company fundamental standpoint. I mean, TSMC is going to continue to get all of this. Nvidia, like those are your two that feel the least at risk, right, and the most to benefit from all of this different capex
Yeah,
spend.
it's TSMC, Nvidia, Broadcom, right? Because
Yeah,
there's still gonna be a lot of custom
still a
stuff,
lot of custom. Yeah,
right? And AMD hangs in there. They have something that's competitive, and
I think
they
so.
stick around,
Yeah, I think
right?
it can grow. I just at the
Because
same rate, who knows? But
because I actually like the way you're thinking about this because I think you're right. I think Jensen probably wants to keep Amazon on a short leash, and so then Amazon's next move is to go big on AMD.
yeah, yeah, and I think AMD is sitting there for somebody, and that's why I'm convincing myself of this as we're talking about it because I initially threw it out there on a whim. But where I think AMD is really struggling is the tie to a true FM, right? They're making their case on open source models, which I'm like, fine, but I don't really think that's the best way. If they were like, oh, Anthropic is tuning for us, then that all of a sudden massively increases their opportunity because Claude is one of the best at coding. That will remain competitive at coding despite what Google does. It's still being used as a part of Bedrock as a model of choice for a lot of Amazon's customers. That would open a huge door, right, to fill that gap. But it requires, right, that tie-in with Anthropic, which Amazon could do, which I think is interesting.
Makes sense.
Okay, let's turn to two other names. We'll go in sequence. So ARM reported and Qualcomm on the same day. I really hate that they're on the same day, but this happens on the same day. Interesting dynamics. Both stocks hit. Uh, there's sort of like a conviction of both CEOs in terms of where they see this going. But let's start with ARM and then we'll finish on Qualcomm. So what was your broad take on the pros and the challenges with ARM?
So the arm, I thought the arm call was very interesting. They almost admitted that they're making their own chips. Certainly, the street walked away with the impression that they admitted it. I think if you really read closely what they said they're gonna design chiplets, but not necessarily whole systems. But the whole thing is very vague, I, right? And everyone fixated on that. Another big financial side of it was they're increasing their opex, and they've been increasing opex for a year now, and it's going up a lot through the year. So they're spending heavily on R&D, and so people are saying, oh, they're spending that to design to get into the chip business, and I think it's more. I think it's more than that, but there's a lot of questions, and people didn't like what they're seeing because of that spend. I think that was the big thing that knocked the stock off. The spend is going up a lot. On the flip side, what was overlooked was the fact that they are steadily raising their royalty rates pretty dramatically,
Yep.
right? Um, they have these CSS compute subsystems, which is like them doing a more complete design than they traditionally do. Those have royalty rates that are 10%, which is kind of roughly double what they've historically done. So, and then their big announcement on the call was that they signed up a customer for the next project,
Version of CSS, yeah,
right? So
which is a
somebody
higher royalty rate.
re-upped.
Yep.
Somebody re-upped, and they said the royalty rate went up on that, so it's above
Yep.
10%. And they said they made a lot of comments like customers weren't pushing back on price at all, meaning that royalty rates can go up even further from this
Right.
latest increase.
Right.
And so all that's, I mean, that's really strong news. Like if you look at ARM just from a very high level, I think the whole point is they they have basically a monopoly on the IP they sell. Let's not talk about Risk Five. We only do that once a year apparently. They have an effective monopoly on the IP they sell, and uh, they are. I mean, Rene said that when he took over as CEO, his goal is to increase the value that they capture. And you look at the numbers, like their royalty rate is up 50% since they went public, since he took over as CEO, and it's just you know it looks like it's going to keep moving that direction. So you sell a product, you have a monopoly on it, and you're raising prices, and nobody's really complaining. So
Well, agreed. And I also my other take from I do this, and then I want to talk about the chip thing. My other take from their upsell of CSS is that they're also saying like it shouldn't be a problem, for us to continue to upsell the other customers on new versions of CSS
right,
who are making more complex CPUs for their data center projects, which 100% right makes sense. The other thing they mention, and this has been a theory of mine for a while, though very hard to model, is as you move to a subsystem or a full compute subsystem that's also chiplet enabled, that increases complexity and should increase the amount of IP slash royalties that ARM can get in that full sort of chiplet compute subsystem, right? Versus just how many cores. But obviously, core counts are going up, and they're getting more royalty per core. But the chiplet adds, I think, a couple of interesting dynamics to that. The other part, which we've sort of talked about too, is ARM also has some plays in networking IP, which will benefit as data center scales out, right? Not just scale up, but scale out clusters, right? They're sort of in that game too. So at a level of just attractiveness of IP and royalties, that story's strong. But everybody really wanted to focus on this idea that they make a merchant because you make a product, right? All of a sudden, you actually got really good margins on that and scale and makes your business stronger. And everybody's sort of looking at their spend going up, looking at their jobs for verification and testing that they're seeing. Um, that to say, I have no idea who the market for that is, and are your customers going to freak out, right, about you competing with them, or are they not even going to try and it's for a completely different solution, which is kind of what I think. But you're right, they strongly hinted at this idea, but obviously, gave no plans.
yeah, and I mean they're if they really go down this path of doing custom chips, they are effectively competing with their licensees. And then the question is, do they care, right? Um, and I think it's a little mixed. Do the customers care, right? Qualcomm obviously would be unhappy with this, but they have lots of reasons to be unhappy with ARM.
Right.
Does Broadcom care? Maybe, because this is essentially they're talking about doing custom chips, which is something that Broadcom does. But on the other hand, ARM doesn't have all the IP necessary for this, so those same customers are going to end up working with Broadcom to do the custom stuff. And I think Broadcom would be fine if ARM wants to do this. If it brings them more business, they wouldn't care. Does Nvidia care that ARM is doing their own chip? That one is a little tricky because you got to assume that a lot of the work that they'd be doing is AI centric accelerators. And to what degree does Nvidia worry about that or feel that ARM is a threat? And I think that's a big mystery, because ARM has a pretty good relationship with Nvidia, right? Nvidia tried to buy ARM not so long ago.
Yep.
We see the attach rate for the ARM based Grace CPU
Very
going up from
high.
Hopper to
Very
Blackwell,
high.
right?
Yep.
It was pretty low in Hopper, but it's going up pretty strongly.
More
And
than
then
50%.
more, yeah, I mean it's
Like
like
could be
90,
80. Yeah,
90,
90.
yeah.
Yeah.
So they have a pretty good relationship there. So I don't think that's the one I would watch. And beyond that, I don't know that any of their other customers care that much, right?
Yeah.
So
No, I think you're right. So there was some speculation that this could be more toward like, you know, Stargate or some of these specific solutions, maybe even sovereign AI. Um,
it,
I
it
don't know.
certainly sounds like what they're really working on custom stuff is something tied to SoftBank, right?
Yeah,
And
that's
so all the sovereigns and whoever SoftBank is bringing in the mix. right? But could it be OpenAI? Maybe, I
Yeah.
don't know. Automotive, like there are a lot of right. Like I said, it's a strong bet on custom silicon, and you go down that path. There's some pretty obvious people that seem to be interested in this.
Yeah. So, all right. So then furthering this just in the thought process, why did SoftBank buy Ampere then? I mean, I know this. That's what I'm saying. This is just like I know we don't know, but if you were going to use ARM for a custom part, why did you buy a company that makes CPUs with their own ARM custom ISA?
And GraphCore, they got GraphCore too. I keep forgetting
Right.
about that one. Look, I still don't understand why SoftBank bought ARM. So certainly don't know why they bought Ampere.
Well,
I
yeah.
think they have ambitions to build more in the data center. And SoftBank is, of course, famous for not having, buying things without having really detailed plans for why they bought them, and just like vibe investing. Like AI is a big thing, and we'll have all this compute, and we'll have the CPU from Ampere, and we'll have a bunch of content. We'll have a bunch of content from GraphCore to do the AI stuff, and the only way we'll get it all to work is to have ARM sort of stitch it all together.
Right.
I
Okay.
guess.
So before we move on from ARM, because I know you tracked some of the sentiment. What was the cause of the concern? Like the stock's down 16% in the week. What what's the driver of that? Was it more the guide, concerns of tariffs or macroeconomy?
I think it was a few things. One, it was I think their guide was a penny light,
Okay.
and I'm convinced now that ARM sets their guidance like a week before earnings, and I think it'd be better if they just did it the day of earnings. And I know the problem is they put a lot of work into their earnings, more than most companies, and so they have it's great. They give us a lot of information. It's really useful, but there's a lot of people involved in that, and so once you set something, it's hard to change in that kind of environment. So I think I think what happened is they set guidance that was going to be good, and then guidance shifted in the week in between. I think that's part of it. Very nitty gritty mechanics here of the street. I think it's part of it.
Hmm.
I think there were concerns. I saw a lot of concerns about spend. This OPEX numbers are pretty big. There are some people concerned about them competing, like I talked
Right.
about.
Right.
And also there's just this thing right now is like if you're not beating strongly, you're going to get punished.
Exactly true. Exactly true. Which parlays well also into Qualcomm, who by all measures had a pretty decent quarter. Management remains super bullish on their adjacencies. They dealt with what, in as best a way possible, the dynamic they've been saying forever about losing Apple by just taking Apple out of a number and saying the business was still up 15%, right? If we just modeled our business without Apple. So dealing with where they can, but similarly, right, you've got to hugely beat. You've got to be clear that you're going to make money from adjacencies. They did say, right, their glorious return to data center should see some money in 2028, which that will be fascinating to see, but that's a long way out. So it doesn't change anybody's model right now of Qualcomm. Um, Auto still remains the standout, honestly, like compared to everybody else in auto. Um, but yeah, what were
I
your key
think
hits?
you hit on it right there. The they auto is exciting to people. It's growing though, but it's growing off a very small base,
Yeah, very
right? So they're
small.
not going through the inventory cycles that everyone else is going through in automotive. One, two, auto is 2028. Data center is 2028. IoT is fine, but it doesn't scale, so it grows.
Yeah,
It's hard to grow it.
it's
And
also
you
a
know what?
lower margins, lower cost of
Yeah,
chip, right? It's tough. It's hard to
yeah.
get hard to get excited about IoT.
It's hard to get excited about IoT. You notice they didn't talk a lot about PCs in this call,
Yep.
right? And so you sort of net that out, and what's left, which is the core mobile business. I will say the one thing that really is concerning and this isn't a critique of the company; it's more a critique of the sell side at this point. we had like this like a month ago, Xiaomi said they're building their own modem, right? And nobody asked about that on the call. And I think it's like noteworthy. You have all five of the top five handset OEMs are doing their own application processor to varying degrees. You have three of the top five handset vendors doing their own modem, and you also have this PR war going on in China now, where Xiaomi and Huawei were trading jibes at each other about like Huawei was bragging about how good their modem was, and Xiaomi was like having to respond, which means now that Oppo, Vivo, BBK are going to have to
Yeah.
do their own modem
Right.
because that's the stakes in this game now. I like that's alarming. That's and again, it's not alarming like rush right out and sell Qualcomm. I'm not saying that at all, but I think it would be concerning to me. Like if you own a banana stand and all your customers go out and start planting banana trees in their backyards, you should be a little worried, right? Those chips, like some of those application processors are not complete, and the Xiaomi's modem is just 4G. I get that.
Yeah.
Qualcomm has time to respond here. My concern is I'm not sure that they are paying attention. I think they're a little over, they are exhibiting overconfidence. Now maybe internally their alarm bells are ringing. We don't know.
Yeah. Yeah.
But
I mean,
I think that needs to be probed much more closely. What's going on?
yeah. I mean, obviously, like managers is not going to come out and be like, "Oh yeah, man, we're super worried."
Yeah,
Like
yeah,
they pointed out too, right? They've got a long license deal with Xiaomi. Um, there's dynamics of this that I think are super super interesting. There's also all sorts of drama that I don't want to get into, but was sort of public and could be tracked around ARM and media and Xiaomi that came on the back of some critiques of Huawei's CEO about Xiaomi that I thought was really really
yeah,
interesting.
yeah.
Um, but I think where it really sort of boils down to is it's gonna need to I think you're right. People should ask this question just to see, but I'm pretty sure I know how they would respond. It would have to start to show up in some numbers before I do think the street freaks out more about than they are.
Okay, so let me be clear about this. For AI, it's okay that there's no business model right now.
Well, but
Just
I don't
someday,
think that's.
years in the future, maybe we'll have something. We can be super long term about AI, but like this
I mean, I
is
think I think
it's okay
it's a
to be
matter
short
of
term.
what's modeled in or modeled out. Like that's harder because there's no real guarantee that right happens or gets modeled out. Because as of now, I mean, obviously that's tiny for Xiaomi. Sure, they might do more, but again, they've got the license. But my point is, you'll see it impact if it happens on their numbers, which will hit MediaTek too, because MediaTek's kind of right in a spot where it does feel like more custom from vendors could actually succeed. Premium would be a little bit trickier, not impossible, but trickier.
Well, that would be my question for Qualcomm management is to say, look, Xiaomi did a modem and basically got a custom modem, custom ASIC work done by MediaTek to build their own modem. Would you be willing to do something similar?
Yeah,
That's the if they ever let me on the call again, which yeah, if they ever let me on the call again, that's the way I would phrase that question.
yeah.
Right?
But a lot of I think our point though, and this is kind of like my take on them, is that a lot of the adjacencies where I actually can see them doing really well are just a long way off. And I'm not including
Yeah,
data center in that. I think data center is a happy debate, which we were going to have in this time,
we're out of
but now we're
time.
long. We were going to debate everyone, but for a future episode. Jay was in the centric group of data center. My conviction, this is just a tease everyone, just so you know, because my conviction was that project was never going to succeed to begin with, that it was failed. Jay has a different opinion. He thinks that they did have some good IP, because my point was they shut down that business and it wasn't going to work anyway. And he's like, no, I disagree. So that'll be a conversation for another
Yeah,
time.
we'll yeah, I think that's fair. Let's have that conversation
Yeah.
another time. I will say that them talking about launching their AI product in 2028 is just made me pull my
It's
hair out.
it's far, and I did see a lot of people sort of complain about that. And again, there's two other things, right? So they did the one short term, I will say I agree with their thesis on, is They're calling this personal AI, so that's the smart glasses stuff with Meta. Pretty much everybody making smart glasses in Google's ecosystem is going to use Qualcomm's AR chip. That will be a sizable business. I believe that glasses will be a successful form factor sooner than later. They did mention physical AI, so saying that they'll be well positioned in robotics, which I do agree, but that is much longer out. And so I kind of feel like there's a lot coming, right, in terms of potential big dollars, but it's 3 years away. Right? And I think that's the disconnect they have with the market now and toward the end of this decade. And that's hard to change anyone's opinion on your model when your upside's 3 years away, right? If that makes sense.
Yes. As one investor I was talking to, I said, automotive doesn't excite me. It's only going to be, 3 years. It'll be only 10% of revenue. And he said, no, no, it'll be much higher than that. And I was like, how? And he's like, because the denominator will be smaller.
Mm,
That's
right.
that's the that's the worry. That's the worry with all this competitive stuff.
Right. Yes. Yes. So, and anyway, I just think these are fascinating dynamics because, Qualcomm's trying to manage through short-term parts of the business and then kind of the adjacencies that actually could be attractive, but we're talking so far away and everybody's so focused on exactly what we said at the beginning, right? Capex to the moon, monetizing AI. These are 1 to 2 to 3 year real returns that are going to happen. And that's the struggle, right? If you're telling me you're good to the end of the decade, that's tough, right? It's a
Yeah, it's
tough
tough.
place to be.
It's
So
tough. But let's have that centric debate
we will.
because
We'll data center debate.
I
Okay.
think the world would be very very different if that had
All
that
right.
had
I want
gone
to
a
play
different
this game
direction.
theory. I want to play this game theory. We game theoried last week at TSMC Monopoly. We will game theory at another one. The if Qualcomm would have stayed in the data center business. Okay. I like it. Good tease. All right. Thanks for listening, everybody. We appreciate your time. We know we went a little longer, covered a lot of ground, but as always, send feedback, your likes, retweets, etc. And we'll talk to you later.
Thank you, everybody. Tell your friends.